Good morning, class. Good day, everyone. My name is Bamidele Emmanuel Ogunribokun. I believe you are all doing well. This is the video for the next module. I want to appreciate you all and your support for the first module that we did, which is the accounting process. We're going into the second module. In line with my intervention process, which is the experimental process for flex blended learning for my thesis. And thank you. As we move to the next topic, we'll be looking at accounting for cash transaction, which is going to be the next topic. Accounting for cash transaction. Like we all know, that we have done this, an introductory part of it in our class. That means in the basic class, accounting for beginners or introduction to bookkeeping, whichever label or course title is given. So under financial accounting will be increase, will update and then increase the topic cash transactions. And what do we have to say in the cash transactions? So let's quickly delve into this topic as we move. Now, cash is something that is very unique. And when we talk about cash, cash is defined in its own ways. And for this class, we are going to define cash to include check, money orders, coins, and every other thing that we use in business. Cash, which you have seen in the last class, is described as an asset and something that we need to be very careful in business that is susceptible towards stealing. So the first thing we need to look at here, which is the outline of the topic, is the need for cash control over cash. There's a need to make sure that there's control over cash because it is something that someone can easily pick up. And as you are taking this, I want to also remind you that you should know that the manual is also sent to your mail and WhatsApp group in order to follow the guide. And also what I've told you in the last module, we can also replay this video as many times before we attempt our next test, which is the post test. Now we can see that management will have to keep what? Monitor on money in order to prevent losing the cash and fraud to fraud and other means. How to handle cash? We also have it here. Cash must be deposited daily in the bank, which you have. Now banks are closer to us rather than just keeping money. But all payment except for petty cash. We'll be looking at this as we move ahead. That what is petty cash? When we get there, we'll look at it. What is petty cash? And we'll be looking at petty cash as it affected the business. We'll be looking at this, and we don't need to get them put into wrong thing. What is petty cash? We'll get there when we move to that topic. When we talk about petty cash, I'll just draw the line. When we talk about organization buying items, what they do is that they also look at how they pay for little amount. And these are things that you have to put at the back of your mind. So organizations also spend what we call little money for transactions, and these things they come handy when organizations are preparing for such. So you can see I talked about that. We'll be looking at petty cash. So later in the topic, you get to see petty cash. Then all cash receipts must be recorded in the cash register. You get to see this that organizations don't just spend money or collect money without giving record. There must be transactions in which petty cash and other cash transactions. All payment must be checked and approved in writing by responsive officers and others you can see as you move ahead. So all these are things that when we talk about transactions in businesses. So when we are looking at cash transactions, we must consider all these. So they are very important and there are things that organizations will also put into place. Then how to handle this? Strict rules must be put in place for cash payment. You don't just allow anybody to just make payment. Daily balances of cash should be done. And then you talk about uses of impress system for rules on reimbursement so that when payments are done, people get to know what they have to do. There are rules on reimbursement, where to pay money and not to pay money, and this reimbursement we are going to talk about later because it's a system in which is underlined by the impress system. What organization to pay, they would have agreed that on a monthly basis, on a weekly basis, this is the amount that should be done. Then proper boundary for cash office staff so that nobody just come in and pick any money the way they like. Then number next, you now talk about what are those things that causes what we call cash overage. When you are looking at this, what are those things that causes cash overage or shortage? Like cash overage, when you talk about surplus of cash, overpayment by customers in real cash, cash received without official receipt, whereby somebody paid and there's no official receipt. So these are to be considered. Giving wrong change and all the rest, these are things that we also consider when we are talking about cash overage. We can also talk about the cash shortage, whereby somebody, you look at, there's a situation whereby money is taken without proper record, misplacement of paid voucher, payment of cash in excess of vouchers amount. We also have free access to payment voucher by unauthorized person, whereby they just remove money. All these will also have to be considered, and we look at that. So laws or misplacement of IOU. So if this happens, organization will have what we call cash shortage, in which you will not be able to know what is the amount that is there. And when somebody has taken the money, you get to see that the value that you have there is not. So having looked at all these controls, because controls are becoming some of the major parts in the way business are done, and this gives us the way organizations perform, they do their practice. So when control is put in place, it make organization to perform very well. Now we're going to look at cash book. Cash book is now that document that is used to record first transaction, first entry to record any cash transactions. In the last class, we look at transactions in terms of cash and credit. But here we are going to be looking at cash book as the module. So in cash book, we have three types of cash book. That's what we'll be looking at here. And then we'll be looking at the other nature of cash book, which is called petty cash book. So the first one we are having is a single cash book. And from single cash book, we don't need to, we call it a single column cash book because we are looking at a situation for a business that only operates with cash, that only operates with cash. And we talk about this, we said that only operates with cash. But when you look at the business that have both cash and bank account, what they have is called a double column cash book. And for a business that operates, that have cash, operate with bank, and also give discount to customers and also collect discount, you talk about three column cash book. And this will also take us back to what we have in our accounting process that we did. that there are two sides to the transaction. We have the debit side and the credit side. Cash is an, remember that we did that in our accounting process module. Cash is an asset. And from that module, we are made to understand that when the cash increases, when transaction in cash increases, we debit. But when transaction in cash decreases, we credit. And don't forget, in the last module, we also said the left-hand side is for debit and the right-hand side is for credit. So this is the format. Now, when you look at this format, you see that it gives a better explanation about cash book. Now, note again that cash book, nobody is going to write single column, double column, three column, or petty card, but the format will let you see. If you look at this format, you can see this is the debit side, this is the debit side, and this is the credit side. This is the debit side, this is the credit side. The date, the particular, the amount of the transactions will be written appropriately. You also have it here. So when it increases, bring it to this side. And when it decreases, you are having situation whereby you are taking money out of the business, it comes to this side. So that is what we have. Increase and decrease. Now, of more fundamentals we also need to put at the back of our mind is when we are going to prepare. Balancing the cash book, this is still the same knowledge that we have when we're doing our ledger. You could see balancing, we are going to compare the amount on the total receipt with the amount on the total payment. What we need to also remember is that when we receive cash, it means the cash is increasing. So when cash is received, and here we talk about payment. So that is that. Okay, let's see that what we have also said, like what I said, compare the total received with the total payment to know the balance at the end. Now let's see all we need to look at. This is an example that I've done. I want you to look at this example. Let's look at it. Just have like 1 minute to look at it, and then you can also check your manual. And for those of us that are not with our manual, we can screenshot this. You can use just few minutes to record it, and then we are going to prepare this transaction. Now, to first guide us, we can just quickly look at this as a playout. This is the balance brought forward from last month, which is balance in hand. And you can see for cash, you cannot have it on the credit side because this money is physical, so it will be on the debit. Now, cash sales, we are going to ask ourselves, is it received? When you make cash sales, it means the cash of this entity, Professor Jimo account, shows. Are you there now? It means it's increasing. And we also said when it's increasing, let's remember that our root debit, the account when it increases, credit when it decreases. So in that case, when cash sales is increasing, the root sales with debit is increasing. Bought goods for cash is a payment. Let's remember again, we said receipt, we talk about payment. When bought goods for cash, that is going to be payment. So what do we do with credit? Bought office equipment, credit, payment. Paid insurance, credit. If Folake paid cash, if Folake paid, if you look at it, this is Professor Jimo's account. Paid cash means that we collected cash from E Folake. Are we there now? Cash sales is also a receipt. Are we there now? Paid wages, that is a payment. Paid traveling, that is a payment. We do cash for personal use, that is a payment. Now, having done this, we can see that all the ones that are received could be added, and then with the deduct payment, we can get balance. But here, the so if you are required to draw the appropriate cash book, it means we have to draw the template. So I want us to draw this. Let's have this in our notes so that we will now have to prepare the account. Don't forget, you are preparing. How do we know the nature? We can see from that. Who is the owner of this? It is for Professor Jimo. So we are preparing this cash book for Professor Jimo. Now draw the format. So as we move, we'll be able to get this done. Now let's start. Remember, you have the template already. So we'll now start. Scene 1. If you are there, I am there. Balance brought forward. So I May 1. Brought forward 900. 900. Number next, cash sales. That is May 4. Sales. Our sales is 800. So we have 800. Number next, we have bought goods. That is payment. So it goes to the credit side, which is on the right hand side. So bought goods. So what is the date? Don't forget, May 8th. So here we talk about purchases. When you are buying goods, it's purchases. And the amount is 500. What's the next date that we have? We have bought office table, May 10. So we'll come here, May 10. Office table. And how much is that? We have that to cost 200. Then we'll move to the next one. Insurance, 15. We have it to be 100. Now I'll pause for a while. With what you have screenshot, I want you to try the remaining 2. Just try 2. So I'll continue and you confirm maybe what you have done is correct. Let's look at that. So cash payment, that is paid cash. That is if Folake paid cash. You see, that means we receive cash from him. Okay, we can do that. Let's go on now. We're collecting money from E Folake. E Folake, that is 400. The next thing we have cash sales again, that is 22. Yeah, the sales is 600. That's 600. Next, we have paid wages, that is 27. Paid wages. And that is how much? 250. So next, we move on. Traveling expenses, 29. Traveling expenses, that is 80. We move on. Is that all? No. So what's the next thing we move to? Cash withdrawn for personal use. That is also an expenses. 30. We have that. We call it drawing. And what is the amount? 50. Now we are now at the point where we get our balances. Remember, closing the ledger, closing the book. We did that in our last module, but we are going to do it again. What we'll do, let's get the total on this debit side and total on the credit side. So you pick your calculator and get me the value. So I will wait. Let's see you do that. I want you to get the amount on the debit and get the amount on the credit. You've done it right. Here it should be 2,700. Let's get for the credit side should be doing just now. I'm punching my own calculator. You should also be doing yours. What I got is 1180. So what do? I subtract the 2,700 from it. So what's going to be the balance? From here, the difference is 1520. So meaning what I have here is balance carried down on 1520. So to still get my 2,700. For any ledger, you now have it 1520. And this is our information. Don't forget all the total here, the total value here, all the total value here. That means all what I've added up here. This value is what gave me this. So we need to be very, very careful when we are doing this. All these value, it is the addition of all these from here to here that we got this value. So that you can get that as you move. Okay, let's see. I haven't done that, like what I explained earlier. I said if you have the transaction to be bank and cash, that means an organization that is operating with cash and bank. So what do? It means you are going to have two columns and you are going to have two column what? So we need to be very careful. So you can see you have here our cash. Are we there? Cash book. Don't forget the name of the column is very important. And when it comes to two column cash book, what I tell you, the must be currency. The currency must be properly written. I think here we have the Naira up there. Now, for two column cash book, there are things that we have to see. One is what called the contra entry. Things like a particular transaction making reference to what simultaneous crediting and debiting of our cash and bank. Without waiting too much time, such examples include cash talk about cash withdrawn talk about cash withdrawn for office. Whereby you are moving money from the bank to you are depositing money to the bank or you are withdrawing money uh, cash in the office. Are you there now? To the bank. That one is I think you talk about deposits into bank and you can talk about withdrawal from bank for office use. This is cash in office, deposit into bank. Now you can also have an issue like the one we said earlier that cash you cannot have overdraft because you cannot spend what you don't have. But for bank, you can have an overdraft. An overdraft in the sense that the bank can give you an amount above what you have deposited, and that is allowed. Now we are going to use this template to now prepare this. And don't forget, we said before we know which of the cash group to use, we have to look at the transaction. But to really look at this record, this transaction, we have an examiner that have already guided us on what to do. So there's no making too much. Here we have Dr. Shola Enterprises. And here the record is two column cash book. If you're having two column cash book, and then you have, so if you're having that, this is our template. If you look at the template, you have that. So let's fix in all what is very necessary to be in this template. And it's going to help us. Number one, who is the owner of the account? Dr. Ishola. Then what do I have? We are asked to prepare the cash book. Don't forget the currency in Naira. The currency in Naira. Naira is very, very important. Now let's quickly go back and check the record. Don't forget we do cash here now. They told us started business with 8,000 naira in the bank and 2,000 naira cash. So it means that the person we are seeing here, Dr. Shola, February 1, 2023. So so 2023, we have February, we'll move. So February 1, exactly, to start business with. Where did they keep the money? They said 8,000 in the bank. They have 8,000 and 2,000 in the cash. So you can see this is a mistake. So let's quickly correct that mistake. The 8,000 in the bank, the 8,000 is in the bank, and while the 2,000 is cash. Can you really do that? 2,000, 8,000. Correct. Now let's move to the next one. We do cash from bank, 5,000 for business. That means he went to the bank, took 5,000, and that is example of a contra entry, which we spoke about February 3rd. So what happened? Very simple. Took 5,000 naira from the bank. 5,000 naira is taken from the bank. The money is taken to cash. And don't forget, we now put C as contra entry. February 3rd, February 3rd, 1,000 now is 5,000 naira. Where is the money coming from? It's coming from the bank. And that is cash going to the cash account from the bank, and it's a contra entry. Now let's go to the next one. We said purchase good 3,005 by cash. So don't forget what we have said earlier. In cash, we debit. In cash, there's going to be debit. We have debit and we have what we call credit. And don't forget, from what we were taught earlier, that we have the receipt and the payment. And let's quickly remind ourselves of what we are doing. We say, when there's a receipt, we debit. Either where we say there's increase, and then we credit. Are we there now? When there's a decrease, because our cash is an asset. So payment now, it means we move to the other side. February 6th, what did you do? Be very careful here now. Purchase by cash. So this is going to affect our cash. 3,500 purchases. It won't go to bank. Number next, we have cash sales. It means they are making sales with cash. So this cash is going to increase. So call February 10. That is February 10. We have sales, which is cash, then cash. Is that correct? No, 4,000. Be very careful. And that's what I always tell you. Don't be in the and 4,000. Now let's see another one. Receive cash from S Benga 1,000. So 15th of February, receive cash. So February 15th, Benga, how much? 1,000. Next, receive cash for 2,000 for B Adeola. So receive cash 18. Adeola. But this time around, the money was in form of check, 2,000 naira. Check, 2,000 naira. The next one, we'll move on. Cash paid into bank. Here now, he's not taking money from the office to pay it into bank. So what happened? February 20, money here is going down. That is 3,000. 3,000 is going to the bank. The contra entry. is deposited in the bank. And the amount is 3,000. Next, we move to the next one. Pay T Abiodun check 1,500. That is on the 23 is paying Abiodun. This time around is paying check. How much is the check? 1,500. 1,500. Next, cash purchases 800. So we are still coming here. Purchases 800. We need to get the date because transaction. So we have here 26th. Next, we have paid rent 1,000 check. So we have rent 1,000 by check. And what's the date? 27th. Next, we'll move on. We have paid 500 for electricity bill. So that's 28. Have electricity. And that's 500. Now that marks the end. So let's get our calculator. And don't forget to use our ledger. So you pick your calculator. So let's 2,000 plus 5,000 plus 4,000 plus 1,000 will give you 12,000. Then what is the next one for the bank? 8,000 plus 2,000 plus 3,000. That'll give us 8,000. Now let's get the balances on this side so that we can know what we. So we have 3,500 plus 3,000 plus 800 plus 500. So that gives us 7,800. We'll write it somewhere here. Let's get the second one so that we can do the balances together. 5 plus 1,000. That's also give me 7,500. So we can see that the debit side is greater. So this is 13,000. This is 12,000. A basis of comparison, so I can have my balance carried down. So what do I do? Now 12,000 minus 7,800. That is 4,200. Then we also have 13,000. 13,000 minus 7,500. That will give us 5,500. So what's taking to the next balance brought down? The balance brought down to 4,200 and 5,000. So that is for double column cash flow. Now let's see the next one we talked about. I said once you're having this, you can now say nobody writes it, you just write book. So from here, know that even this information, we know that this is a 3-column cash flow. Don't forget, currency is very, very important. You must give the currency discount. And please don't forget your Naira there. Now we can also see that which you can see in this. And these have also been prepared in order to guide your way. And if you look at this very well, is having a bit different from what we have. So we can see the template, which I said is not going to be covered now because the target here is for us to look at single, double, and we look at the petty cash. So that is what we're going to look at for now. So you can see this and you see how the discount move. We'll look at that in previous class. So function of the cash book, as what we have said, serve as a prime or subsidiary book for daily cash transactions, which we have looked at. I've also given you that to help you. Now, of more focus that we need to put into our mind is now the petty cash. The petty cash is used for recording expenses of smaller, are we there now, size than those recorded in the main cash book. The main thing we have to put in the petty cash that is usually operated is the imprest system, which we talk about the cash flows. Now, what do you mean by this? Is very simple. If an organization have said that at the end of every week, we'll give your petty cashier 1,000 naira at the end of the week, end of the week. Now, when the week comes to an end, number one is that the petty cash cannot spend any money above 1,000. If anything above 1,000, he has to wait till the weekend. So when the week ends and he has spent 800, the rule is that he will have a balance of 200. Now, what the interest system is talking about, which is cash flow, is that if you need to give him money again, the money you are going to give him is to make sure it does not exceed 1,000. So if you have spent 800, just reimburse him 800. That is the interest system. Reimburse him with 800. This 800, we call it reimburse because that is what he has spent. If he has only spent 100 naira, you will reimburse him with 100 naira to make sure that his money based at 1,000. And you can see he has his own advantage. And what he does is that he saves the time of the main cashier. Maybe you want to buy petrol, you want to buy stamp, all those little ones, you give it to the petty cash. Now, this is the format for petty cash rule. Be very careful when we are doing petty cash rule. Now, then you you can see the amount is on this side, which you see. Then we also have the date. It means petty voucher, one of those things. And these are the small items which they are recorded into transaction. Now, at the end of the day, this will give us analysis of what has been done. Now, we have this one to quickly do. You can see how voluminous this is, and we're going to look at it. Blackout Limited operate an impress system. It's a company we all know. The question was actually done when we have the national grid as an issue. So that's why I'm putting up this and just to reiterate. Now, Blackout had this, you can see it's something for 1 week. And what do we want to do? We're required to prepare impress. So what's the name of this company? Blackout. So what are we doing? We're preparing the cash group. So let's get our petty cash book done. Now, what we need to do is to read through the question, and then that will guide the way we prepare our record. So if you are there, I'm there. Let's look at this, and this will guide us in the way our record is done. Balance in hand. From here, you can be told that less than 1,000 for that. So what's the balance in his hand? 750. So we have that at the beginning of the period. So that's what we have. So we have that October what? Let's get the date. October 20. So yes, we are looking at October. So we have 20. Month we have 750. So that is brought forward. But we're told that reimbursement came, that is 19,050. 19,000. That came on what day? 21st. So it was given 19,050. If you are given this, can we quickly use this to know what is the amount for the organization set cash flow? We can do that. We just say 19,250 plus 750. It means the cash flow for this petty cash is 20,000. And that is it. So that is that. Now we can now move to the payment. Now what we have with this unique is very simple. When we pick the value, it has its own column. So we have the first one, transport. So let's take transport to where it belongs. 22nd, we have transport. And maybe the PV number 01. Transport is 1,150. So we'll bring it to 1,150. And it will be under this transport here. 1,150. Okay. Now let's see the next one, stationary. Called stationary. PV2. The amount is 450. We have the total here 450. So it goes to under stationary. Okay. Analysis. We have what we call printing. That will also be under our stationary. That is 23rd. Now, if you look at this, printing is not printing of letterhead, can be something general. Are we there now? Because stationery, we are looking at that as what we buy and home. So printing is 3, and then that gives us 4950. 4950. 4950. Next, move to the next date, which is electricity. Electricity 25th. 25th. Electricity voucher 4, and that is 1950. So which will come here 1950. 25th, we have one call photocopy, and that goes to stationery. 25th, 25th, photocopies, voucher that, and the amount is 685. So we have that under stationery 685. Next, what do I have? Stamp. That is 25th to stamp 720. 25th, stamp 15. It goes to our stationery to 750. Then we have another stamp that is on the 26th, 2005, 26, 2,500. Next, we have another stamp, 850, as on the 26th, another stamp. And the amount for that is 850. So close these two. Then we have transportation to Igbo 26, transport Igbo 09, that's our PV number, and the amount is 400 naira. 400. Where's our transport? Yes, these are transport here. So we take it as transport. 100. Next, so we have photocopy, that's 27. Photocopy. And what's that is 10. So what's the amount? That is 725. 725. Next, we'll also move to photocopy 125, that's 27. And 11. And how much is it? 125. Now, once you're done with this, you're going to close this point, and let's close all of them. Now, I'm going to close this side. So that's what we're going to do. Now, what we want to do now is to get the values for each of these transactions, for each of the events, and that will guide us in our record. Now, let's go on. We get the total for all the expenses. We can get for this one, this is 4950. Now, this one is 1550. You can add the rest too. Let's have that for 415 plus 685 plus 715 plus 2500. As I'm punching, I believe you are also punching yours. So this give us 5235. And then we also move to the next one, 1950 plus 725 plus 125. That gives us 2800. Now, if you add it to that, it give you everything 4950 plus 52. So let's add it 1550 plus 5235 plus 2800 plus 4950. That gives us 14,000. That's 14,535. Now, this is where the reimbursement will come in. The total amount that has been spent is 14,000. So, as the year comes, in the month of week comes, we will now have a balance right now. 5465. That gives us 2,000. So, yeah, 2020. So, which will now come later. And looking at that amount, we will now have for you to start the next week, balance for the 5,465. So if there's going to be reimbursement, the amount of reimbursement will be the amount that he has spent. Because the interest system says that he must always have that 20,000 as his interest. And that's what we're going to do. So, and that's the information that you get to see when you are looking at interest. Now, all these you can also see as we have done earlier. So I want us to quickly look at this quiz, and this will guide us to prepare for what we have, because I want to make sure that we are able to look at this and then also do that. Like what I said, that this module is focused on the single, double, cash book, and then petty cash. So for example, if the cash flow of 2,000 and 1,460 is disbursed during the period, how much will be reimbursed? Remember, we just did something very similar. I said, whatever is the amount that has been spent will be reimbursed. So, given this, what would be our answer? Without thinking, we can see our answer. So, the option here is this. Now, the petty cash book is regarded as part of what? Is it double entry? No. Balance sheet? No. It's part of our what? Cash book. For petty, as we have smaller items. Let's look at this analysis. Looking at this question, this is the amount. You can see it's a format extract of what we have. What do we have for a petty cash? Analyze the monthly cash flow. From here, no thinking is required. We say the cash flow is the total amount that is on this side that is to be received. And the addition of this is going to give us 9,000. On February 24th, the petty cashier will be reimbursed with how much? From what we said, whatever amount that he has spent is what he will be reimbursed. How much has he spent? He has spent the total amount. How much will he be reimbursed? The answer is B. You'll be reimbursed the amount that he spent. Now, if you look at this, we need to focus on cash because it's one of the major things that organizations have to put at the back of their mind when they are preparing. You see cash is prepared. Look at this now. What was the balance on account? This I'll give you like 2 minutes to think about it. You have the option A, B, C, and D. This is a single cash book. Now, what will be the balance as at 31st December? Don't forget, for you to get balance, you need the total receipts that you have on the debit, and you need to deduct the total payment that you have on the credit. So for my own calculation, total receipt is 7830, total payment is 5950. If I deduct that accurately, it will give me this to confirm. This is the value. You all have value. That is option E. Now let's look at B. We need to be very careful. B now. In this B now, we are looking at the date of 14th of December. Be very careful. What are the transactions that occur before 14th of December? We only have two. That is 1, 5 and 1, 3, 7. So these are the only two that happen. The rest did not. So if you add them, that will give you 5,000 only. So that's that. So you can see, you can decide to know the cash balance at the particular date. This one is together. And if you look at this, why I'm doing this is because you can see when you are doing your options, you have to shade properly. Shade everything properly. Don't just use circle. I also remember that. I saw that when you were doing your pre-test, a lot of you were shading. Let's go. This amount of money set aside for petty cash, we all know that cash flow. Petty cash cannot have a credit balance. We all know the reason. We said the petty cash cannot pay out more than what he has received. So you can't have that. It's also like your single colon cash book. You can only pay what you have. Yeah, we have two more. A cash book that have discounts is called a three, which will give you the identification. In which ledger is data relating to cash discount found? You need to be very in which ledger. When you are looking at that, the only ledger where you're going to see that is in our book. Then cash shortage may be caused by dash, except that. What can make organization have cash shortage? I always do this. I call it try to learn. I use 2 minutes. When you say cash shortage, meaning that there's no more, the money that you are having is less than what you have recorded. It can be due to preference, somebody can steal. It can be due to misplacement of payment voucher. Are you that? Payment of cash in excess of voucher amount. Yes, the money will short. Overpayment by customer. No. If a customer, so that's it. Now, for what we have done, I want to thank you. So this is the module on cash book, and like what we have done earlier, I also promised that I will send this to you, which I will send to you the PDF of the material. And like what I told you earlier, that you will get to see that the event of the cash book, you can see all what we have done. I told you that the three column will be done at an advanced stage when we want to start looking at some discount factors and all the rest. So class, thank you very much. And please don't forget, you can watch the video as many times as you want. And please, if there's any question, I'll be available physically between the hours of 3 to 4 p.m. to also clarify some things. Thank you. And this is the presentation, the conclusion of the presentation for the Flex Blended Learning. Thank you very much, students, and I wish you a great day. Thank you very much.